When you're selling options, I believe the number one best indicator, and I know you're going to hate that I say this, is the gut indicator. Let me show you a trade that I pulled off that was totally based on my gut. And if you want to follow along on my journey, you can find all my broker statements at onlypeterpru.com. So here's what happened. I had a $12 cash secured put for American Airlines that was expiring on the 17th. I saw United right here was reporting earnings on the 15th. Obviously, this is 2 days before my expiration. Now, here in the morning, I was getting a little nervous. I was like, you know what? I feel like airlines never report good earnings. And my gut's telling me, Pete, close out that cash secured put on American Airlines. Now, this is the American Airlines chart. And yesterday, literally on the 15th here, right, we were trading around like that 1230-ish kind of range. So I went over to my brokerage on Robinhood, and you can see this is the put close, the buy to close right here on American Airlines, and I paid $10 to close that position out. So here's what that full trade ended up looking like. Obviously, it was a $12 put, locked up $1,200. Initially, I collected upfront premium of $40, right? $10 to close it out, netted 30.31, and I netted a 2.53% ROI on my collateral in a less than 30-day period. Absolutely fantastic. Now check this out. This is today. American Airlines down from its highs yesterday of around 1250, trading at 12, and I still have down 4%. I would have been assigned tomorrow. Now listen. Assignment isn't a bad thing, right? I would have been totally fine if tomorrow came around and I had to buy 100 shares of American Airlines. I flipped the script, I run covered calls. But here's what I did instead. Let me show you real quick. So once I freed up some of that collateral, I got to go put that thing back to work right away. So what I did was went into Kenvue 1550 puts that expire on the 14th. And then I went into my Snapchat 650 puts, which in my opinion, definitely very, very risky plays. But the reason I went for these higher plays, ROI on collateral plays, is because if they continue to rebound like they are, I have a lot of cushion here on this upfront premium that I collected that I can give back some of this, still hit my 2% ROI on collateral goal, and get out of it without being assigned. Yo, but listen, I can't stress this enough. Look, I've been doing this for just about 7 years. Assignment is okay, right? Like my play right now, I'm kind of just premium chasing a little bit to add some entertainment value to the public portfolio. But with that said, when you sell that cash secured put, one of the best frames of mind that I take into is like, I'm assuming assignment. So even if I assumed assignment for American Airlines, okay, that's fine, right? But when the opportunities come up, of course I'm going to close it out early and hit my ROI on collateral. I treat this like a business, and my goal, right, with my portfolio, my personal goal, right, is to always get to that at least 2% ROI on my collateral, right? So if I can do that and close out early, not get assignment, I'm going to do it. If you like this sort of content, you want to learn more about selling options,